With perceived growing risk in tech, investors are rotating into industrials, sending the sector to record levels. Joining us now is Nicole DeBlase, Deutsche Bank research analyst. Nicole, great to have you with us.
Thanks. Great to be here.
It's actually been an extraordinary run that maybe people aren't even paying attention to. It's the longest winning streak since August of 2020. The transports, though, Nicole, as you know very well now, they're very different in terms of the components of the index itself. There are the airlines, there's the truckers, there's the expediters of the world. So where do you see sort of the most opportunity in 2026?
Yeah, so we cover electrical equipment and multi-industry, not transports. And I think with respect to what we've seen within the broader industrial space, I think investors are starting to become a little bit more optimistic about the potential for a recovery. And I think that's come from a few things. It's come from tariff policy stabilizing. It's come from hope that maybe the Fed would cut. It's come from the ISM index being in contractionary territory for 3 years running. And I think hoping that we start to see a reversal of that in 2026. I think that's all kind of tied into why the industrial sector has been outperforming in recent weeks.
Apologies. I don't know why transports are on the brain, Nicole, so I apologize. But in terms of industrials, some of the greatest winners in the industrials have been some of the areas that are tied to AI that are thought to be sort of related AI plays. Do you see their fortunes sort of following the AI trade, or can they still go higher because of the very strong backlogs that a lot of them are experiencing and reporting?
Yeah, so we kept a lot of our positive views on the AI space. In fact, our top pick for 2026 is Eaton, which is, a company that has about 20% exposure to data centers. We also really like GE Vernova. We've been big fans of that company for a long time. And the reason why we've decided to keep those buy ratings is because you're absolutely right. Backlogs are extended. Companies are now booking orders into 2027. In the case of GE Vernova, booking orders into 2029 and beyond. So we have quite a bit of visibility into continued upside versus consensus estimates, and the magnitude of upside is still very great. We're coming to, potentially high single digit to low double digit upside potential through 2028, which is still very attractive to us.
I mean, that investor day for GE Vernova was extraordinary in terms of the guidance lift and then the follow through in the stock, not just that day, but also the day after, Nicole. And I'm wondering if you start thinking about the out years, 2028, 2029, and you sort of think to yourself, let's take out a percentage of that AI exposure. What would that leave us? Just in terms of trying to get our arms around where this stock should be, like what is the floor valuation if the AI trade deflates a little bit?
Yeah, I mean, I think the floor, we kind of saw this play out with GEV over the past few months. I mean, the stock kind of stalled in the high 500s, low 600s. And so that's kind of what we come back to for what a floor could be when sentiment around AI was a little bit more bearish. But I think, listen, the reason why the stock traded up so much on the investor day is because this isn't just a story about gas turbine demand, which is extremely robust, by the way, but we now have visibility into the gas power services aspect of this driving continued outsized earnings growth versus peers into the 2030s. We just don't find that visibility in many spaces in industrials.
So it's the services sold along, so the recurring revenue as opposed to just the sale of the turbine. It's the services that follow that make the story much more compelling.
Exactly. They sell a long-term service agreement with every single gas turbine, and those gas turbines that they're selling that will go into the installed base over the next few years will come into their major service windows in the 2030s.
In terms of the industrials that may have been left behind, are there some that you think are underappreciated at this point?
Sure. I mean, I think if we do see a short cycle recovery play out, there are three that come to mind where our analysis shows us that there's still significant upside potential. So Dover Corporation, Illinois Tool Works, and Ingersoll Rand are the three where we see the potential for not just earnings upside in that event, but also a multiple re-rating. So you can get upside, north of 20% for all three names, we think.